Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Tuesday. Hopefully everybody's having a GGD, a great green day in the market. You know, I always wish the best for my viewers and subscribers. So guys, today we're going to be looking at the overall portfolio metrics, how we've been doing compared to the overall market. And then we're going to talk about my buying power, what I bought, and then what I plan on doing with my next dividend, as well as the individual stocks and how they're performing, and my watch list, seeing if there's anything in the buy range. So jumping in today, we are down about $400. Not bad. For the week, we are up $420, about 1%. The 1 month mark, we're down about 1.5%. 3 month mark, we're down 3%, down about $1,600. Year to date, we are down $626.06, or down 1.23%. For the 1 year mark, we are down $2,816.42, or down 5.32%. And then all time, we are up $14,555.31, or we have an accumulative return of 40.88% all time. Then I have a buying power of 1583. Jumping into the individual positions, we've got 143 shares of Realty Income, sitting right around $9,000 of market value. Average cost is $67.10. Around 18% of the portfolio is in Realty Income. Today we are up $1.43. In total, we're down over $600, down about 6.3%, with the dividend coming in on April 14th, just like clockwork, like it always does, at $36.47. So at that point, I will have right about $50 in dividends. Next, we've got Coca-Cola. We've got 10 shares. The goal for the portfolio this year is to get another zero, add to that, have 100 shares of my favorite company. Market value right now is sitting at $622 on the dot. Average cost is right around $61 per share. Looking to drop that down, but not at these prices because it's above my average cost. Total return, we're up $13, up 2.23%. Love Coca-Cola. I'm going to be trying to pick up some extra hours at work, maybe do some overnight shifts to get a little bit more cash flow to try and add more to that position. But currently, even if I had the money, I wouldn't be putting it in Coca-Cola because I don't want to average up. I want to cost down average. Next is the big payer for this set of months, that being Altria, down 52 cents, or down about 1.16% today. 315 shares, over $14,000 of market value. Average cost is $47.34. Right around 28% of the portfolio is in Altria. Today, we're down $151, down 1%. The total, we're down right around $900, down almost right around 6% on Altria. So this would be a cost down average opportunity right now. Pretty big dip, about $3 per share. But I would have to buy a lot because my average cost wouldn't go down as much, because since there's 315 shares, only buying a few is not going to lower that average cost. It will make a difference, but over the grand scheme of things, I'd have to buy another like 300 shares to really even that out. Then I have a dividend coming in of $296.10 for my 315 shares. Love that dividend. It's the biggest payment out of any of my companies. And they've actually grown the dividend quite consistently since I've owned them. I've owned them for about 4 years, and I believe the dividend was 84 cents when I first bought them, and now they're at 94 cents, so 10 cents in 4 years over the course of 315 shares. It's pretty good compounding. And that will be going towards T. Rowe Price. Next, we've got Apple, which is down a little bit today. We've got 1 share, $165.79 of market value. Average cost is $132.66. 0.33% of the portfolio is in Apple. Today we're down 38 cents, but overall, total return, we're up $33.13, up nearly 25% on Apple. I do want to make Apple one of the biggest positions, if not the biggest. I want Coca-Cola to be the biggest one, but to be honest with you, I would be 100% comfortable with Apple overtaking that spot. And honestly, the thing is, even if I have less shares of Apple, I do think that this will build into the biggest position. It'll take time, and I will have to be patient because Apple is a very high quality company that has reliable growth, very good profit margins, and great leadership. So there's a lot of positives with Apple, and that really does reflect, I think, in the stock price. So, you might not get a lot of deals, or I might not get a lot of deals with Apple stock simply because it's such a high quality company, but that's why it's important to have an influx of cash. That way, if a deal does come up, I can jump on it. Maybe not as aggressively as I did it at an AbbVie, but I just don't have $10,000 sitting around. But I would like to add to Apple and eventually make it in the top 3 positions. Honestly, for the first set of months, I would like Coca-Cola to be the biggest payer. That's going to be tough because Altria is such a big payment, and Apple is kind of in the same boat here versus AbbVie because AbbVie is such a reliable dividend grower. But I would like Apple to overtake AbbVie with the total dividend income. It will just take a lot because Apple only pays like 20-some cents a share right now. So it will take a massive amount of capital to overtake AbbVie. But hey, that's the name of the game, is patience and just trying to take advantage as much as you can. Next, of course, we've got AbbVie, which this is my best overall investment. We've got 95 shares, currently sitting over a bit over $15,000 worth of AbbVie, which is nuts. That's a down payment on a house. Average cost is $95.19. 30% of the portfolio is in AbbVie. Today we are down $60 total. We are up $6,136.21. Or an cumulative total return of nearly 68% on this one position. So I'm happy I've got 95 shares. I'm just going to let those sit and compound. And just like I said with Altria, this is one of those that I've held for years. So when I originally bought it, I believe the dividend was like $1.07, and now it's $1. I think it's $1.41, but I think it's higher than that now. But even at it, I think it's $1.47. But the compounding, not only in the stock price, but with the dividend as well on top of it, is just beautiful to watch. So this is one of those that I would love to add more. It's just like Apple. I'd love to add more here, but I can't at these prices. Apple, I am more likely to add to Apple at the current price than I am with AbbVie because I'm up so much higher. Next, we've got T. Rowe Price, down $1.75 today, which is awesome. 110.60, 101 shares. So I did buy a share with my dividends already, which is fun, which is the name of the game, guys. We are using the passive income that we're making from our stocks to buy more shares. And so that compounding machine grows. So before I was getting paid $122. Now it's $123.22. Not a huge bump up, right? But that's still going to compound and make me more money. So every share, regardless if it's an 18-cent dividend like with Apple, or 21-cent dividend with Apple, or $1.41 with AbbVie, or, it doesn't matter the amount. It's the fact that every dollar that we put in, every share that we accumulate is making us more passive income. So eventually, if I keep, chipping away at it, this is going to be retirement. So that's the name of the game, is to use our income to buy shares and then allow those shares to compound. So at 101 shares, we've got $11,170 worth of market value in T. Rowe Price. Average cost is right around $121.60. 22% of the portfolio is in T. Rowe. Today we're down $177. In total, we are down over $1,000, which is beautiful. Love to see it. Down 9%. And guys, the reason that I say that is because if you look at this yield now, they are yielding nearly 4.3%. When I bought this stock, I had like a 3.7% yield. So I'm getting more. I'm getting the same company, right? But I'm getting it at a lower price. It's like if you want to buy an iPhone 14 and you see, they're worth, say, $600. I'm just throwing it out there. Say it's worth $500, right? And then you go in the next day and it's worth $480. You're like, it's cheap. What happened? It's cheaper. What happened? And they say, we just felt like giving you $20 off. Why not, right? So that's essentially what this is. The stock is at a deeper discount than what it was when I originally bought it. So if we look at my average cost at $121, now it's $10 or $11 cheaper than when I bought it, which is just more upside. So instead of having $30 of upside, we now have $40 of upside, which is awesome. But just like with AbbVie, it will take a massive amount of capital, which I currently don't have, to mirror that initial investment. But I'm happy at 121 because I still have a great upside potential there. Plus, I have a growing dividend. So this is still a great play. I'm really I'm happy to just wait. I'm really content with the position, but at current prices, I will be using dividends to snowball into more shares. Next, guys, of course, we got our watch list to finish out the third set of months. I'm looking at Visa, but I want it at 190-ish, so I'm not touching it here at 228. And Berkshire's at 309. I want it around 300. So right now, it's got about $44 worth of upside. I want like 50 to $60 of upside, so I'm not touching it here. But I do want Berkshire, and honestly, I would love to own a share before the meeting. So, guys, with that being said, thank you so much for watching. Remember to like the video, subscribe if you haven't yet, because it really does help out the channel and keeps me pumped up to see the numbers growing and keeps me motivated to post. So, thank you guys so much for watching. Remember to hit the like button and hit subscribe, and I will see you guys tomorrow on Wednesday with another Robinhood portfolio update. Take care, guys.